Is Bitcoin's existence about to end? Quantum fear, a crumbling wall of trust, and investors' new anxiety. It is around midnight. In many major cities around the world, trading screens are still glowing. Somewhere, a trader is staring at the red and green candles on a chart. Somewhere else, a long-term investor is refreshing their portfolio again and again. And somewhere, a small investor is sitting in fear, wondering whether the very Bitcoin he bought believing it to be digital gold is slowly turning into the biggest risk in his hands. The fear is not just about the price falling. The real fear is this: if questions start being raised about the very foundation of the technology on which Bitcoin's entire structure stands, then what will remain? And this is where the curiosity begins. Is Bitcoin's existence really in danger, or is this once again the kind of fear that looks huge in headlines, but is not that immediate in reality? At this moment, Bitcoin's price is around $72,000, and within the day it appeared to move in a range of roughly $71,000 to $73,000. That means there is movement in the market, there is volatility, there is nervousness in sentiment too, but there is no picture suggesting that Bitcoin is suddenly about to disappear. This is the first thing that is important to understand. Bitcoin's prices move under the impact of fear, greed, geopolitics, liquidity, and narratives. All of it. Recent market coverage also showed the same thing. US-Iran talks, ceasefire-related news, and broader risk sentiment moved crypto prices up and down. That means the panic the market is feeling right now is not only about technology, but also about global uncertainty. But the real reason behind the new unease around Bitcoin is not the price chart. It is quantum computing. In recent days, a detailed white paper from Google Quantum AI intensified the debate in the crypto world that in the future, powerful quantum computers could weaken Bitcoin's cryptography. The biggest punchline of this paper was that breaking 256-bit elliptic curve cryptography may require far fewer physical qubits than older estimates had suggested. The paper said that with fewer than 500,000 physical qubits, the threat may appear much closer than conventional wisdom assumed. That one line became the reason new turbulence spread among investors, developers, and crypto commentators. Now here, one very important distinction must be understood. A quantum threat does not mean that Bitcoin will be hacked tomorrow morning. Google's paper did not say that such a machine exists today that can break Bitcoin. What the paper said was that older assumptions about the threat timeline may have been too loose and transition planning should begin from now itself. In other words, the threat is not of an immediate collapse, but of future preparedness. The fear feels big because questions are being raised about Bitcoin's most important identity, its security. If people begin to believe that in the future its signatures, wallets, or transaction model could be hit by a quantum attack, then the psychology of the asset can change. And the price of any asset is built not only on its code, but on trust. Bitcoin's greatest strengths have always been described as its scarcity, decentralization, and resistance to censorship. The limit of only 21 million coins, no control by any central bank, and the ability to transfer value from any corner of the world. These are the things that gave it the status of digital gold. But there is also a fourth pillar in this narrative, one that is spoken about far less: cryptographic trust. That is, people believe that if the private key is yours, then the coin is yours, and that the network is designed strongly enough that no outsider can easily breach it. The debate around quantum computing touches this very pillar. That is why this fear is not just technical, but psychological too. Another important part of Google Quantum AI's white paper is that it discussed not only dormant keys, but also the possibility of things like shorter range attacks during transaction processing. The paper says that if fast-clock cryptographically relevant quantum computers arrive, then new kinds of attack scenarios during transaction processing would also have to be considered. Put simply, the concern is not only that old exposed public keys could be at risk, the concern is also that in the future, even while spending, some windows could become vulnerable. This is unsettling because ordinary investors often see Bitcoin as a set-it-and-forget-it asset, whereas developers know that technical details like transaction design, address reuse, and key exposure matter a lot. This is where the second big question arises. If the threat is this serious, can the Bitcoin community do nothing? The answer is, it can do something, but it will not be easy. Google's white paper clearly says that migration toward post-quantum cryptography will be difficult from both technical and social perspectives. According to the paper, if post-quantum signatures are introduced in Bitcoin, then the size of signatures and public keys could become much larger than they are today. For example, the paper says that Falcon signatures could be around 1,280 bytes, whereas Bitcoin's current ECDSA signatures are usually around 64 to 73 bytes. Just imagine how much storage, bandwidth, and compute requirements would increase. This could affect block space, transaction efficiency, and even decentralization. That is why Bitcoin's quantum risk is not just a hack story, but also a governance and design story. If the community wants a security upgrade, then it will have to create a new balance between performance, scalability, and decentralization. And Bitcoin's history shows that building community consensus around design changes is not easy. Referring to the 2017 Bitcoin Cash hard fork, the Google paper reminded readers how divisive even issues like block size had been. In such a situation, something as big as post-quantum migration, one that includes wallet software, node software, exchange systems, user education, and mass fund migration could become a very long and difficult process. This is where the story begins to look even more dangerous. Because if the transition is difficult and quantum progress is fast, then the gap in between creates fear. The Google paper says that at Bitcoin blockchain's current transaction rate, even if the network processed only asset migrations, it would still take many months to migrate funds from vulnerable addresses to post-quantum safe addresses. This means that by the time the threat becomes visibly clear, it may already be too late. That is why researchers are repeatedly saying that crypto communities will have to leave behind the mindset of we'll deal with it when the time comes. Quantum risk is not the kind of thing that can be patched away at the last minute. Now the question comes, is only Bitcoin at risk? No. The scope of Google's paper extends to broader cryptocurrency ecosystems as well. It mentions the Ethereum Foundation's post-quantum research efforts, post-quantum progress on Algorand Solana and XRP Ledger, and also post-quantum first blockchains like QRL and Abelian. This makes one thing clear. The problem is not only Bitcoins, but of the entire digital economy built on modern public key cryptography, banking, secure communication, wallets, signatures. Many things depend on this same family of technologies. Even so, Bitcoin is in the headlines more because it is the oldest, the largest, and the most symbolic crypto asset. If a question mark is placed on Bitcoin, investors see it as a danger signal for the entire sector. And that is exactly why questions like will Bitcoin come to an end create panic among investors. The truth is that financial markets like to think in binaries, either moon or doom, but technology transitions are often not binary. It is possible that Bitcoin may not end, but evolve. It is possible that its code-based wallet practices and security assumptions may change. It is possible that in the future, coins with exposed public keys may be considered more vulnerable, while holders following safer operational practices may be in a comparatively better position. In other words, the real battle may not be about Bitcoin dying or surviving, but about Bitcoin changing. Even then, investors' fear should not be taken lightly, because Bitcoin's market value is driven by narrative. When the story runs that Bitcoin is the hardest money ever created, demand comes in. When the story runs that states cannot stop it, conviction grows. But when the story changes to future supercomputers may challenge its cryptography, then even if the threat is years away, sentiment gets affected. The market always tries to price the future. That is why, even if the quantum threat is not yet a practical reality, it has already become a narrative risk. Bitcoin's recent price action should also be viewed through this broader lens. Financial coverage clearly showed that geopolitical events, such as US-Iran ceasefire news and talks, affected Bitcoin like a risk asset. Recent reports by Barron's and MarketWatch mentioned Bitcoin reacting within the $71,000 to $73,000 range. This means that the market still treats Bitcoin sometimes like a safe haven, sometimes like a speculative risk, and sometimes like a gauge of macro sentiment. As long as this identity itself is not fully stable, existential-looking headlines like quantum risk will increase its volatility even more. But now look at the other side too. As much as the Google paper gives a warning, it also says that the transition is realistic, provided it is not delayed. In the paper's concluding section, it is clearly said that a timely transition toward post-quantum cryptography is realistic, and that some real-world projects have already made meaningful progress. That means researchers are not talking about panic, but about urgency. This difference is very important. Panic says, everything is over. Urgency says, start preparing from now. And Bitcoin's future story may well be decided by this very difference. There is one more interesting thing to understand here. Bitcoin's existence has not survived only because of code. It rests on the entire ecosystem of community, miners, developers, exchanges, custodians, and users. If tomorrow the urgency around the quantum threat increases, the Bitcoin network will not suddenly vanish into thin air. Around it stands a global industry that has the economic motivation to save it. A market cap worth billions of dollars, holdings by listed companies, ETFs, custodial platforms, sovereign and institutional interest. All these forces together will try to make it adapt. That is why the simplest version of Bitcoin is finished is often a more dramatic headline than technical reality. Yes, but that also does not mean investors should become carefree, because some risks may be Bitcoin specific, especially in the case of older address formats, exposed public keys, reused addresses, and dormant coins. The Google paper explicitly discussed the long-tail problem of dormant quantum vulnerable assets. This means that some old holdings could become special targets in the future. That is why expert discussion is now moving beyond just price targets toward wallet hygiene, address reuse, and future migration preparedness. The ordinary investor may not pay attention to this detail yet, but for serious holders, this could become a major theme in the coming years. So, is Bitcoin's existence really about to end? Based on the evidence currently available, the honest answer is no, not immediately. But could Bitcoin be forced in the future to rewrite its most important security assumptions? The answer is yes. And perhaps that is the real center of this entire fear. As of today, there is neither any publicly known machine that is breaking Bitcoin through a quantum attack, nor is the market behaving as if Bitcoin is heading towards zero. But the language of researchers is clear. The threat may be closer than previously thought, and migration may take years. That is the combination that is making investors uneasy. Perhaps the biggest truth of this story is that Bitcoin's real test will now not be on the price chart, but on adaptability. When it was created, it challenged traditional finance. Now it will have to answer future computing. If the community manages consensus, engineering, and user migration in time, then Bitcoin's existence may not end. Rather, its next version may be born. But if complacency takes over, if people keep believing that there is still plenty of time, then the very asset that was thought to be unbreakable may slowly begin to lose its psychological edge. And many times in markets, the fall begins not with code, but with confidence. That is why today Bitcoin's story is no longer just the story of one cryptocurrency. It has become a story of technology, trust, time, and transition. On one side is a market moving around $72,000, and on the other side is research advancing inside quantum labs. On one side is the dream of the retail investor, and on the other is the hard reality of cryptography. In the coming years, what will be decided is whether Bitcoin was great only because of scarcity or whether it can become great because of adaptability too. This is not the time for panic, but it is not the time for carelessness either. And perhaps that is the uneasy truth that has caused the real panic among investors. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.